Hello and warm greetings to you, my dear friend and valued companion. Welcome to another exciting episode of Tradingfinder. Today, we're going to thoroughly discuss together a significant new feature in the Pocket Option Group. We want to carefully review the Express Trading tool together and see precisely what its fundamental nature is, exactly where it can effectively fit into our established trading system, how you can strategically use it to significantly increase your account's overall profitability, what its potential risks are, and much, much more. So, if you're a dedicated fan of binary options trading and currently have an active account with the Pocket Option Broker, please stay with us in this informative episode because we're going to gain a lot of valuable new information. Alright, let's now proceed to the main Pocket Option website. When we thoughtfully enter this site, we immediately see a comprehensive overview of its various impressive features. But the crucial main question is, how can I readily access Express Trades? If you look at the right side of the chart, you'll see a set of icons. There are several features available here. One of them is Express Trades. We click on it, and what does it show me? It clearly tells you that this particular feature is only available on a real account, and you absolutely cannot use it with a demo account. So either you switch to your real account from here, or you can simply click here and select the real account section. Now, I have successfully selected my real account, but a crucial question comes up. What exactly are these express trades that I want to trade with them? Normally, when we actively trade in the dynamic Forex market, for example, right here where the EUR-USD currency pair is constantly fluctuating and moving, based on our careful analysis and our individual trading style, our own meticulously developed trading system, we might confidently say, okay, the recent significant lows are clearly higher than the previous lows, and similarly, the highs are also noticeably higher, indicating that the market has experienced a very good and sustained upward movement. I definitely want to take a long position here. I want to buy into this upward trend, and I fully expect, for instance, that the market will continue to move significantly up from where it is currently standing. That's precisely how traditional trading in the Forex market typically works. Now, perhaps the stop loss level I've carefully set for myself here, or the first take profit target, maybe the stop loss I've meticulously set for myself will automatically close the trade when the price hits that specific level. This particular scenario could potentially happen in just 15 minutes, or maybe, for example, we get a very long and strong candle in just 1 minute and the price reaches that predetermined level, or perhaps it takes almost an entire hour, or the trade might unfortunately fail altogether and result in a loss. But how exactly does it work in the context of binary options? The situation is a bit different in that we also have to carefully consider the crucial element of time along with the prevailing price. If I say that the market is going to move up from here and I want to take a long position to buy right here, I have to consider by when can it realistically reach that anticipated level. If I go ahead and make the trade and say that I expect the market to reach the specific level I mentioned within, say, 30 minutes, I set that precise 30-minute time frame here as the absolute limit. If I say it should definitively reach that particular level in exactly 30 minutes, but it actually gets there at minute 31, just 1 minute later, then the entire trade fails for me. So the crucial element of time, the designated time frame, becomes a truly key and absolutely determining factor alongside the exact price point we ultimately want it to reach. Now, the innovative Pocket Option Broker has recently given us a very useful feature called Express Rates. What exactly is this intriguing feature? It says, for example, when you originally wanted to make a trade, which specific asset did you choose and select? For example, you chose IUD USD, you traded on it, and here you said, okay, from here the market is supposed to move up. So you placed a buy order here, and after 30 minutes, the market reached the level you predicted and moved even higher. And you profited with a percentage multiplier that we told you, for example, 92%. Now, if you repeat this same success on at least two other assets besides this one, that is, three assets that you analyzed and your analysis was successful, I will calculate your profit as a multiplier of your previous successes. If we want to go through an example of this together, what would it look like? So, for example, let's say you meticulously analyze Apple, Intel, and Johnson & Johnson together. You carefully examine all three of these prominent companies and conclude, for instance, that all three are currently moving upward in a positive trend, or perhaps that Apple and Intel are exhibiting strong bullish sentiment while Johnson & Johnson appears to be bearish. Based on this comprehensive analysis, you decide to enter trades on all three of these distinct assets simultaneously. If your strategic analysis proves successful, your potential profit will be a substantial multiple of this particular set of trades. Consider it as a remarkable 92% return on your investment. To gain a clearer and more profound understanding of this crucial concept, let's meticulously examine a detailed table together. Here, I've meticulously documented 10 hypothetical trades that I've conducted. I specifically stated that I would execute 10 individual trades, each consistently featuring a ratio and a multiplier of 92%, and the initial amount I allocated for each and every trade is precisely $100. So, up to this particular point in our discussion, if I were to execute these trades in the conventional usual manner, let me scroll up just a bit to illustrate this point more clearly. If I were to perform these trades normally, and if I were to achieve just one correct trade and analysis, I would successfully win $192. In the very next scenario, if I were to achieve two correct trades in a row, executed separately, the total profit would amount to $384, followed by $500 after that, and so on, with the profits accumulating progressively. If I were to execute 10 entirely separate trades and all 10 of them were to prove successful at the very end of this sequence, I would have accumulated a grand total of $1,920. But let's carefully observe what precisely happens if we choose to implement this strategy in the highly efficient express mode. As we previously discussed, the absolute minimum number of trades we are required to execute to qualify for the advantageous express rate is 3. Therefore, I must carefully select 3 distinct symbols or assets. For example, I specifically chose AUDNZD, EURUSD, and GBPUSD. I determined that AUDNZD is a strong buy, EURUSD is a clear sell, and GBPUSD is also a buy. I meticulously set my entry points and parameters precisely like this and then proceeded to enter the trades. Remarkably, all 3 of these trades were successful, and my initial analysis was absolutely correct. Now, the critical question is, how much profit do I actually make here in this specific scenario? I am trying to understand precisely how much the final amount is that I possess at the very end of this particular trade. Specifically, I am curious as to why I ultimately ended up with the exact figure of 707. The fundamental reason for arriving at this specific numerical outcome is because I meticulously performed a series of multiplications. I initially multiplied 1.92 by 1.92, and then subsequently I multiplied that resulting product by 1.92 again. That is the primary and overarching reason for the final calculation. That means with each instance that you add a new trade, an additional 1.92 units is added to the previous amount, ensuring your profit consistently grows in a compounded manner. So this fundamental principle represents the core point about how we can be attracted to the express rate. It is the fact that we possess the ability to grow our profit in a compounded manner. For a clearer understanding, if we examine this concept within the structured format of a detailed table, allow me to bring up a comprehensive table right here so that you can fully grasp the concept with clarity. If you observe this particular table, as you can perceive, the greater the number of trades we execute, the progressively higher the numerical value becomes. Of course, at this moment, since the system has not yet accounted for these 2 trades, by the time we reach the 8th trade, meaning when we have 10 trades actively running at the same moment, our numerical value experiences exponential growth. And while this prospect can indeed be attractive, it is crucial to understand that at the same time, it inherently carries an extremely significant degree of risk. Now, you might ask, why exactly is it considered so risky? From this perspective, if you look here, let me clear this. Let's assume that we've had 3 consecutive trades, each one profitable, meaning every analysis we did was successful and we made a profit. But then the 4th trade goes wrong. We predicted the trade would go down, that the trend would move downward, but instead it went up. So what happens here? Here, our account for that particular trade goes to 0. Why exactly does it go to 0? Because even if, for example, out of those 10 simultaneous trades, most of them are indeed successful, if we happen to lose on just one single one of them, our entire balance goes completely to 0 on that one unfortunate losing trade. So this is the primary and most significant risk associated with express trades. Now, if you carefully look at the chart, for instance, I might say I'll buy USD CAD, then I'll proceed to buy CHF JPY, I'll sell EUR USD, and let's say for another specific symbol, I'll also sell USD CAD as well. So I've explicitly stated that I'll enter trades on these four distinct symbols. The inherent risk here for me is that even if I've meticulously analyzed three of them correctly, but I unfortunately make a crucial mistake on the fourth or even a fifth symbol, my entire trade goes completely to zero. This is our main and most critical risk, which we also thoroughly examine together in Excel. When you trade binary options separately, you might have 1, 2, 3, or even as many as 10 individual trades. If just one of them happens to go to zero, it's generally not a significant problem. You've successfully made 9 profitable trades, and your capital is only marginally affected by the 10th one going to zero. It's truly not a big deal in the grand scheme of things. But when you enter an express trade, even if 9 out of 10 are highly profitable in the context of express trading, that one single losing trade can make your entire position go completely to zero. That fundamentally means you lose absolutely everything you initially put into that express trade. So you must absolutely and unequivocally pay very close attention to this substantial risk. It's certainly not a risk you can simply ignore. This particular type of trading is extremely and inherently risky. For people with very little trading knowledge or experience, it's absolutely and emphatically not recommended. As we've always consistently said, binary options represent an exciting and dynamic world, but they undeniably require much more extensive knowledge, specialized expertise, and practical experience compared to the traditional Forex market and the various trades we typically execute there. So we've thoroughly seen how these specific trades work. Just keep in mind that on a real trading account, you definitely and unequivocally can't perform these types of trades. On a demo account, you can't do them either. You absolutely have to do it on a real account, and you can even test it out there. For those individuals who say they want to try this particular tool for a while to see if they can effectively work with it or not, unfortunately, that specific option isn't readily available. You can only execute these express trades on a real live account. There's nothing particularly special or complicated about it. On the Express Right, you simply select the specific symbol you want, set the precise direction, for example whether Brent oil will go up or down, set the exact time and other relevant parameters, and then proceed to enter the trade. All the various numbers and settings are fully adjustable, and you can competently handle all the intricate details yourself. I sincerely hope the comprehensive explanations I've given you about express trades and their inherent risks have been truly useful and that you've significantly benefited from them. If you have any other additional questions or if there's something still unclear that we couldn't adequately address, you can easily contact the dedicated Tradingfinder team below and write and send your important questions to us. My diligent colleagues will respond to them as quickly and efficiently as possible and provide you with accurate and helpful answers. Until another program and another lesson, I leave you in God's care. May God protect and watch over you.